Hello fellow students, you are welcome back to single entry and incomplete record. In this series of video, we'll be looking at practical questions on single entry and incomplete record. So this is going to be our first practical question on single entry and incomplete records. So if you are new on this channel, please consider to subscribe and turn notification bells on. So anytime we upload any new content on this channel, you'll be the first person to get notified. Thank you once again for watching this video. So as we are going to go through, consider to like and share. So let's go into it real quick. So we are having, as you can see, we are having a question on single entry and incomplete records, and this is how it goes. Mr. Barker, who operates a cold store, has not kept proper records, proper books of accounts. His assets and liabilities on 31st December 20S3 were as follows. So these are the items that he have in his records: features and victims, stocks, debtors, creditors, bank, and cash. During the year ended 31st December 20X4, his drawings amounted to 18,000. That was the drawing that he made in the year 31st December 20X4. He also introduced additional capital amounting to 12,000 cedis. At the end of the year, his assets and liabilities were, so at the end of the year, also having these assets and liabilities. Then additional information: 1. A provision of 860 Ghana cedis is to be made for doubtful debts. And then 2. Motor van is to be depreciated by 25%. So we are required to A. Prepare statement of affairs for Mr. Barker as at 31st December 20X3 and 20X4. B. Statement of profit or loss for the year ended 31st December 20X4. Then lastly, a balance sheet as at 31st December 20X4. Right? So when we started single entry and computer record theory in the class, I'm giving all the links in the description section of the video. You can check and then watch. We said that for you to extract or know the capital for a single or incomplete records organizations or people who do not keep proper records, for you to know their capital that they start with or capital that they are ending with, you must provide what a statement of what affairs. It's similar to a balance sheet, but just like here we give an extract, we add all debit, we add all assets, then we less all liabilities, then whatever is left will be our capital, whether it is closing or opening. That one will depends on how you actually, and the date that will actually give you. So that is the thing that we need to understand in that case. So let's start to prepare a statement of affairs for 20X3 and 20X4. Let's take note of that. So I'm going to have my statement of affairs here. A. Statement of affairs. Statement of affairs as at 31st December 20X3 and 20X4. So underline it. So in that case, this is what I'm going to do. I'm going to have 31st December 20X3, and I have my 31st 20X4. Right? So I'm having these in that case, because that's what I'm asked to prepare, right? So first I will start with what we call the total assets, or I'll start with what assets. Total assets that we have in that case. So I'm having my currency signs here. Ghana cedis. This is from a question from Ghana. Ghana cedis. All right. So here we start with the total. So you're going to prepare them in that order. We look at the asset that was existing as at 31st December 20x3. Then we look at the asset that was existing as at 31st December 20x4. So let's check back to the introductory part of this question. We're having fixtures and fitting, right, as an opening what? Balance. Okay. So fixtures and fitting as F and F. Fixtures and fittings. Fixtures and fittings. And then the figure was 6040. But let's check fixtures and fittings. At the end of the day, was the same thing, hasn't changed. So in 34 December 20x4 was the same, doesn't change. 6040. So you write them in that chronological order. So you're going to go there in that simultaneous way. Alright. Then we come back to motor van. We need to start with all the non-current assets. After that, move on to the current. So motor van. Were you having motor van at the beginning of the period? No. So motor van will be dash as it expressed this 20x3. But were you having a motor van as it expressed this 20x4? Yes. And the motor van was what? Let's see the motor van. It was 12,000, right? But then the additional information 2, it says that motor van is to be depreciated by what? 25%. So we need to depreciate then the remainder we have is that we're going to have a depreciation of what? 25%. So this is what I will do. I'll take the total value of the motor van, which is 12,000. Now subtract my depreciation of 25% of 12,000. So when I do that, I had the remaining to be 9,000 for motor van. So should I just apply 25% on 12,000? Whatever you get, subtract from 12,000 then to give you the remaining balance. That is the net book value for motor van. I hope that is clear. So that is how we undertake those decisions. All right, good. So after the motor van, do you have any other non-current assets? In that case, no. So we continue with our current item, which is what? Stock. Continue with stock. Were there any stock as at the beginning of the period? Were there any stock as at the beginning of the period? Yes, we're having a stock of 26,460. So you're going to record stock 26,460. Was there any stock existing as at the end of the period? Yes, it was what? Let's see, 29,400. You also record that one as at the 1st December 20x4. So 29,400. 29,400. So that is a stock value for these different dates or different periods. All right. Then let's move on. After stock, we come to what? Debtors, right? Debtors. Debtors. Was any debtors balance as at 31st December 20x3? Yes, there was debtors balance of what? 15,560. 15,000. So I'm going to record that one. 15,560. What about at the end? At the end, you are having what? A debtors balance of what? 17,260. But then let's come back to additional information. They said a provision of what? 860. A provision of what? 860 is to be made for doubtful debt. So you're going to subtract the provision so that we know the remaining balance. That provision is created to cater for any bad debt that will arise in future. All right. So once that provision is created as an expense, we need to take it off. All right. So you're going to subtract from the debt balance so that we know the actual balance that exists as at 31st December 20x4. So let's take note of that. So I will subtract the 17, let's see here, or 17, so 17,260 minus the provision, which was what? 860. When I do that, here is 0, here is 0, borrow 1 from here, making 12, so I'm going to get what? 4. All right, then here is left with 16, so it becomes what? 16,400. So just subtract the 860 from 17 and 260, and you're going to get this balance in that case. So we call this figure debtors less what? Provision. So let's take note of that. All right, so that was for 31st D's 20x4. So after debtors, do you have any other current assets? We can talk about what? Bank. We're having bank accounts, so we can talk about bank accounts. Was there any bank balance existing as at 31st D 20x3? Yes, there was a bank balance of what? Bank balance of 12,300. 12,300. So we're going to have that one here. 12,300. What about the end? What about the end? What about the end? The end, we're having a bank balance of what? 15,360. So 15,360 in that case. I just record. What about cash? We're having a cash at the beginning and a cash at the end. So we record that one too in that case. So we're going to have cash figure of 900. Then at the end we're having what? Cash figure of what? 640 in that case. So is there any other assets left that we actually haven't taken into account? Let's see. So all the assets have been taken into account. So you add all the figures here, so I get to know our total assets as at the period. So 6,040, 26,460, 15,560, 12,300, then 900. When I computed for the total on my calculator, I had, let me check it well. I had 61,260. You can also compute for that, and let's see. Then that of 20x4, I had 76,840. Please try to use your calculator and compute, and let's see whether you're going to have the same thing, so that you are sure that the figures are right. All right. Then you less, after here, you less your liabilities. Let's move a bit so that you can see what is happening. So we less your liabilities, your liabilities in that case. So let's see the liabilities. What was the liabilities? Were you having a long-term liability? So you can see that wasn't a long-term liability, but we're having what, a short-term liability, which is what? Creditors. So credit, was there any credit balance as at the beginning 20s3? Yes, a credit balance of what? 28,000. 660. What about the end? We also have 25,000. 25,560. So that was all the liabilities that we're having in Mr. Parker books. So since we are lesson, we put bracket and subtract, right? So when I subtract, I had a capital. Here will go 0, here will go 0, here I'll get 12, so 6 in that case. So I'll be getting 32,600. Then here to 0, then you do the calculation on the calculator. I had 51,280 in that case. So we call these the capital. The capital. There is a capital. So this capital is opening capital and there's the closing capital. Alright. So let's take note of that. Then B, we are asked to prepare. We are asked to prepare a statement of. We are asked to prepare a statement of profit or loss for the year 31st December 20S4, right? So as it is noted in an incomplete records, for you to know, as we said in a single entry incomplete records class, when we were discussing the HLP, we said at the end of the day, though it's incomplete record, but we need to know how well our business is faring, right? Or how it's progressing. We can do that, or we can know that by preparing a statement of profit or loss. And we said that one, we just take into account the capital that we started with the business, right? And the capital at the end, and all other activities that takes or that have undertaken place when we started the capital in the business and what we have actually had at the end of the period. So we said those items can be in the case where we withdraw some of our money from the business. We also introduce some of the money during operation and other aspects. So when these things are captured, you need to adjust so that we know how to go by in that case. So the statement you're going to write, statement of profit and loss for the year ended 31st this 20x4. We're just preparing for just 31st this 20x4. So first we said, if you remember the format, we said you start with what your closing capital at close. Capital at close. You start with your close capital at close, and in the question you can see that capital at close was what, 51,000. That's what we have actually derived. So here, when you're preparing the statement of affairs, please take your time and prepare, because if you get it wrong in the first statement of affairs, it's going to affect your profit statement in that case. So let's take note of that. So that was our opening capital. Our boys, I should have bring there, but no problem. Then was there any drawings that we made during the year? Yes, there was drawings. During the year 31st December 20x4, his drawings amounted to 18,000. So drawings, just add the drawings back. It was part of the capital, but we want to know that in that case. So here it is 18,000. So that was also added to, then had 60 9,280 in that case. So after that, I'll less my capital at close. Sorry, capital at start. Capital at start. We're having capital at close and door, so less your capital at start. What was the capital at start? We're having capital at start asset. So that was what we have actually drive here, which is 32,600. Then was there any additional capital or fresh capital that we did introduce? So there was a fresh capital that we introduced during the operation. Sorry, you know what I'm talking about. There was a fresh capital that we started. So fresh capital that came into the business, fresh capital during the operations. That one was 12,000, right? 12,000. So this one to also give you 44,600. So 44,600 in that case. So once you are lesson, I'll subtract from, then I'll get my profit asset 35 December 20th. So here will be my net profit. Here will be my net profit, which will be, when I subtract, I had 24,680 in that case. So try also checking, let's see whether you got the same. So this is how we also actually derive the net profit for businesses that do not operate on a double entry. Just consider capital start. If there was any drawings, you add to the capital close. If there was any drawings, you add to the capital close. Less the capital that you started with the business. If there was any fresh capital, additional capital introduced during the operation, you add back to the capital start, then you less the total or the sum from the sum of the capital close and the drawings, and the difference will give you the net profit in that case. So let's take note of that. I hope everything is going well. So if you have any questions, just comment below in the comment section. I'll give you a response. If it video is helping you, try to please like it and share so that we can reach many students as possible. Okay, so let's continue with the last set. See, we are asked to prepare a balance sheet asset 31st December 20th. So let's go back to, or let's continue with the preparation of the balance sheet in that case. So this is our balance sheet as at 31st December 20x4. So as we started, that's where we are actually going. So as you started with the statement of affairs, the same you're going to prepare. These are the balance sheet you are going to prepare in a format that you know. Okay, we are not going to add all assets and liabilities together, but you prepare and do other separate, and then prepare current account and do stuffs in that chronological order that you know in that case. So first we start with the non-current assets, right? Or the fixed assets, as you know. The non-current assets. The non-current assets, or fixed assets for short. So non-current assets, we're having what? Fixtures and fittings. Fixtures and fittings. So in that, this is what we're going to do. Let me add another currency sign here, because we're always going to consider the cost, the depreciation, then the net book value in that case, right? So fixtures and fitting, what was the cost? What was the cost? The original cost, that is the historical cost, was what? 66040. That was the historical cost, but at the end of the December 20th for was the same thing, so no depreciation. Depreciation itself, so mean the net book still remains the same. 40. All right. Then we are having motor van. Motor van, right? Motor van. Remember, motor van, we purchased the motor van during our operation, right? That was the end when we were in the year 20x4, right? Good. So in that case, when you have motor van, this will be the value of motor van was what? The historical cost was 12,000, right? The historical cost was what? 12,000. So you record that one at the cost here. So the historical cost was what? 12,000. And then there was a depreciation. The question, they said 25% of motor van is to be depreciated, right? 25% to be depreciated. So we work, I think we did this in the A part statement of affairs where we subtracted, right? And so we just apply 25% on this, and that will be the depreciation, the accumulated depreciation in that case. So that was when you apply, you're getting what? 3,000. So you just apply 25% on 12,000, you're getting 3,000. That would be the accumulated depreciation. So when you subtract that depreciation from the historical cost, then you get the net book value of what? 9,000. All right. In simple terms, this is what I'm talking about. 25% of 12,000, and whatever you get to be the depreciation, that will be 3,000. Then you subtract from the historical cost, and you get what? The net book value of 9,000. So let's take note of that. Is there any other non-current assets? So that was also you actually total them. So the total for this side, the total for the fixtures and motor van will be, so I had the total here to be 18,040. You close it. Then here will be 3,000. Close. So when I subtract this from this, the remaining will be the same as adding 6 and then 9. So we can sort 15,040. And I won't close it because I'm going to add the current asset situation to. So we come to current assets in that case. So the current assets we are having was stock. So stock, we are picking our information that was existing as at 31st D 20x4 and not any other information. So stock in that case was 29. So we're going to have it here 29,400. You can even check the statement of affairs that we prepare. That one give you more hint, more than going back to the question. But you can also see in that case. And we're also having a debtors balance. We're having a debtors balance as at the year, and that balance was 17,260. But then there was a provision that we made during that year as at 31st December 20. So we need to take the provision from there so that we get to know our so that balance, let me bring it here, will be 17,260. So I'll less my provision for that for debt, and that was 860. So once I less it, okay, the remaining balance I'll bring it here, which is 16,400 in that case. I hope that is clear. All right, then there was a cash. So we start with continue with bank rather. Let's move in that order. Bank. A bank fee that was existing as at 20x4 was so it was, so let me bring it here, 15,360. You can check the balance that was existing at the end of the period. You will see that was 15,360 for bank. What about cash? Cash too, we're having 640, meaning that the business keep less cash than bank, most of it cash in the bank, more of it in the bank as most of it. So that was all for the current assets. So let's compute. When I compute, I had a total of what? 61,800. 61,800. 61,800. 61,800 in that case. So after getting this, then you less what we call your current life. So less your current liability. Remember, we are using assets minus liabilities go to capital. Okay, that's what we are using. So let's take note of that. So the current liability in this case was just the creditors. So you record your creditors. So it was just creditors, and we're having a creditors balance of, as at the end of the year, was 25,560, right? That was what we were having as at the end. So I'll less this figure from this, then the remaining will give me 36,000 240, and we call this working capital. That's the money that you used to run the business on day-to-day basis. So working capital is your current assets minus your current liabilities. Take note of that. Current assets minus current what? Liabilities. So let's take note of that. All right. So after getting working capital, you add your working capital to your net non-current assets, and the total will give you your net assets. So your net assets, will be your working capital plus your net non-current assets. So this is what I mean. So this is what I mean by net non-current assets. The 15,000, this one, the 15,040 added together with 36,240, then you get your total net assets. So net assets 15,040 plus 36,200. So let's see, 15,040 plus 36,240. Add 51,200 and what? 51,280 for the net assets. So after that, you come to your finance by. That's your capital side, right? come to your finance by. So finance by, you start with what? Your opening capital. Capital start. That's why we did the statement of the affairs, and we learned in the statement of affairs it was 32,600. Let's go back and see. So this was what I was saying, 32,600 as an opening or capital. So you're going to write the 32,600 as an opening capital. So let's take note of that. So I'm going to have it here, 32,600. Then we add our net profit, also our net profit in the question. And net profit, so in the question was, the net profit in the question was what? And the question was 24,000, was 24,600 and what? 80. Then if you have any other additional capital introduced, also add back. Okay, so we are adding fresh capital that we introduced, so we know the capital that we actually started the business. So fresh capital, and there was a fresh capital in that case. The fresh capital was 12,000. That was additional capital that we actually introduced. So you have that, and in total I had total of what? 69,280. 69,280. Then after that, after getting this figure, then I'll less my drawings, if any, and there was drawings in that case. So the drawings figure was what? 18,000. So less 18,000 from this, and you'll be getting what? 082 here. Now let's 8 from now, getting 1. So here will be 280. Then here we're getting what? 5. So you'll be getting 51,280 as your capital that you employed in the business. So capital employed, capital that you employed, capital employed, the capital that you employed. So you realize the capital employed is now equal to your net assets. In that case, this is your net assets. That's the 51 times. You can see your capital employed to the same figure, so meaning that everything has been prepared well in that case. So this is how we prepare financial statement for incomplete records, and this is how we extract the balance sheet in that case. So we started preparing statement of affairs to know our capital at start and capital at close, then prepare statement of profit or loss to determine our profit, then we prepare the balance sheet. So that's how we go by in preparation of financial statement for incomplete records businesses. Those are that keep what? Proper set of what? Accounts. So thank you once again for watching this video. If it was helpful to you, please consider to subscribe, like, and share so that we can reach as many students as possible. So I'll see you next video where we discuss practice question 2 on incomplete records and single entry. Bye bye.